All right, I want to welcome everybody here to this afternoon's e-learning event. It's basically talking about my chart setups, the chart patterns that I'm looking for, and we'll be going over some examples, and then we'll go over some live charts and some Q&A. So we're going to have fun this afternoon. Basically, how to earn a decent amount of money with a small amount in your account and low risk. I have to put out a disclaimer. Trading involves risk of loss of capital. I guess you guys all know that, right? And here's the agenda. A little bit about my background, who I am, and a little bit about the EMinis, what they are, what the benefits and pitfalls are, which are, quote, best to trade. A little bit over my chart settings. I talk about some example trades, and then why you should be interested in the live futures room and performance since the 1st of May. I will let you know this is also being presented to the Denver Trading Group next Thursday afternoon. So that's part of the reason why I have some of this in here. You might know a little bit about me, but I'm an ex-U.S. Air Force fighter pilot. I have master's degrees in both computers and business. I've been an active trader since 1998. I've been an investor since the 80s. Full-time trader since 2009. That's my only job. Technical trader, but I do use some limited fundamentals. I'll make an assessment, especially when I'm doing long-term holdings like leaps or whatever. The fundamentals will come in, but I will use, say, a 2-year weekly chart or something like that. I do moderate the live futures room that you know here, and we're having an open house through the 31st of August. What are the EMinis? The EMinis are basically electronic traded funds that trade at a fraction of the value of the full price contracts. And what I'm going to do is I'm going to point you towards a few websites here. One of them is Investopedia. And that's basically, you can read that afterwards. It's basically the history and origins of the EMinis or whatever. I do like the Wikipedia. And here's the website there. They basically talk about, I have a table here that's really nice, which talks about what the exchange contracts, what the exchange they trade on, their ticker symbol. Some people have a slash in front of them. Some of them put a dollar sign in front of them. So it really varies from broker to broker. It talks about the multiplier. Really not as much interested in that as much as the tick size and tick value. Now, initial margin and maintenance margin are all set by the exchanges, but the actual margin for day trading will be set by your individual broker. NASDAQ futures are talked about on this Wikipedia page, and primarily they talk about the NASDAQ, and they go into some trading strategies. And one thing that's very important here is go down to U.S. tax advantages. For those who are U.S. taxpayers, there's a 60-40 rule, and that no matter how short a time you hold, you get a favorable capital gains rate. You get the long-term capital gains rate for short-term holdings at 60%, 40%. So 40% is ordinary income and 60% is capital gains. Now, with the new tax laws and whatever, they also throw in this first 20% exclusion if you, say, own have a corporation, maybe an LLC or an S Corp, and you have that money flow into your personal account, the first 20% will be excluded into the new. So this is the way I understand it. I do my own taxes. My wife jokingly says that I read J.K. Lasser's every year about the 500-page document for fun. I do read them. I don't read every word in it, but I read an awful lot. I skim through most of it. But if you want to know more about the tax advantages and whatever, I want you to please go out and consult your own tax advisor, not me. All right. Why the E-minis? They're affordable for the average retail trader. They allow you to control a significant amount of the ES. As of the 3rd of August, it was over $140,000. And like I said, NinjaTrader has $500 in intraday. Other brokers have higher margins. I don't know of anybody who has lower margins than that. That's basically a bond you're putting up against your holdings. That they're expecting you not to let it go down too far. And I think TradeStation has something like $1,600 or $1,700 per contract, which is quite a bit higher than most. The ones that are most traded in my book here are the ES, which is the S&P 500, the YM, which is the Dow, NQ, which is the NASDAQ 100, RTY, which is the new Russell, CL, which is crude, and GC, which is gold. I tend not to trade gold very much anymore because it really goes in fits and starts. It gyrates all over the place, and I know the same could be said with crude, but on inventory day, the crude does tend to have predictable patterns from what I've been able to find. All right, why trade them? What are the benefits? Well, all of them are highly liquid, and in the third quarter of 2017, the S&P minis, averaged 1.4 million contracts per day. So they're extremely liquid. You can use market orders on the way in and on the way out. You're not going to get a whole lot of slippage. They are very technical. So when you see the charts, basically they're going to work. You're not going to get thrown around by earnings reports or a lot of news events that are really surrounding an individual security or company. Now, there are news events that happen. Somebody, the Donald, the hair man, goes out there and tweets something about maybe increasing more tariffs on China or Turkey or something like that. It can move the market. Basically, you have round-the-clock trading. Starts at 6 o'clock on Sunday night and goes till, I don't believe that's 5 p.m. I think it's 8 p.m. on Friday. I'm going to double check that. So that's what slide number that is. Number 6. Okay. On Friday afternoons, I don't trade anyway. And I suggest that most people, by the time you hit the closing bell, you should probably not be out there trading. And now, they do close for about an hour and 15 minutes every day to do, basically they're totting up the score type of thing. The E-minis don't require a large account. You could probably get away with $5,000, but I'd probably suggest that you probably have between $7,000 and $10,000. Excuse me. Primarily to be a buffer so you don't get yourself into any kind of trouble or margin calls or anything like that. There is no pattern day trader rule. You're considered a professional just by mere the nature that you're trading in the futures. So therefore, they don't care whether you're an idiot and you lose money like crazy. They assume that you know what the heck you're doing. That's a big assumption. The commissions are basically pretty low. They do vary from broker to broker. One of the highest commissions that I've seen out there are things like Schwab, Fidelity. You're looking at Thinkorswim, which is about double what I get at a Ninja broker. Some commissions as low as 53 cents for the contract. But let's look at all the fees and the commissions to come into play. And really, you're talking about just under $4 or round trip, or you're talking about as high as almost $8 for Thinkorswim. There is no wash sale rule. So if you go in and out, short, long, They don't care. They know you're going to trade in and out. You're not going to have to go through the rigmarole of trying to match the trades up or make sure that you haven't violated that tax law. You can easily trade long or short, and you make money to the upside or to the downside. I already talked about the tax advantages, and Google out there for the 20% exclusion. You'll find out more. And what I really love about this is that the record keeping is all done at the broker. They send you a 1099 at the end of the year, and they said how much you earned, and you throw it into your handy dandy tax program, and you get the 60-40 short long term. Short term, long term. That's actually long term, short term. All right. Minimal daily prep. How many times do people spend hours at night researching stocks, trying to find out which ones are the best, and then trying to keep track of a watch list that maybe have 20 or 25 stocks on it? You have right here 4 that I have to watch for. Actually, the 5th one is the ES, but I watch that just to view how the markets are going. And one of those 4 is crude that I only normally trade on Wednesday. So it's down to 3. I can put it on a quad chart. And you've seen those already, though. Fast moves. Hey, that's good, and that's bad. So we'll talk about both sides of that coin, and double-edged sword. Here's some of the potential pitfalls. The biggest one that I see is the ease of execution could lead to overtrading. Either revenge trading, or you've got to get the money back somehow. I mean, you could easily punch the buttons, go in and out, get buy signals and sell signals, and they flip-flop like crazy. So that's the one that all of us need to be cognizant of and do whatever it takes to get that out of your system. The losses can be huge if risk isn't managed properly. We'll talk about that in a little bit. Like I said, the moves can be fast and vicious. Fast to the upside, vicious to the downside. And in all of them, there are black boxes and institutions, but especially in the S&P 500. Well, if I kind of liken the S&P 500, well, all the futures is to be swimming with the sharks. But the S&P 500, you add the piranha, the barracuda, and the killer whales to it, and you put yourself in a small tank, and you start looking like food. Actually, they're going after each other. We're just happy to get in their way. They don't care about us. They don't see us. We're too small. However, if they go try to bite one of the big fish, and we get in the way, oh well. I really like this cartoon here, where it's an engineer sitting there and he says, I'm good at understanding numbers. Number 2, the stock market is made of numbers. Number 3, therefore what? Where did all my money just go? Maybe just because you're an engineer. I think engineers don't make a very good traders. People who make probably the best trader are women. They don't have the ego as big as the side of a barn door that they have to be right. It is what it is. They trade what they see, mostly. It's a glittering generality, but it's mostly true. All right. Somebody's going to ask, well, which one's the best one to trade? Well, you have to define best. So I'm going to start by trying to define best for me. And then you guys can either define it differently or choose to accept my definition of it. I'm going to start off with how many dollars per tick and then how many, points incremental. Well, the ES is $12.50 a tick in quarter point increments. So you've got $50 a point. And a point can happen pretty darn fast. Like today in the ES, it moved pretty fast. The Dow, YM, $5 per tick in 1 point increments. The Dow was down almost 300 points at one point. At $5 a tick, that adds up to some serious money if you're not careful. NASDAQ, $5 a tick in quarter tick increments. It moves, I think the last I checked, was it down 100 points at one point? I think it was. That would have been a pretty substantial hit to your account. The Russell, $5 a tick in 0.1, so a tenth of a point increment. So 1680.4, 1680.7. Crude oil, $10 a tick, 10-cent increments. What that just boils down to is, well, what's important, Steve? You got $5 a tick on some of them, and the key is how much it is in the ticks, how much volatility there usually is, and how much you're willing to risk. So to me, the best depends on the amount of money you want to risk. To me, I'm all about money. I'm not about percentages or anything like that, because I have to pay my bills based upon dollars. By and large, normally the Dow and the Russell are less volatile in ticks and money criteria. Followed by the NASDAQ and the S&P. And ultimately gold and crude oil, which we know can make violent moves, especially on inventory day, or then they can go into snoozeville until about 15 minutes after Steve closes down for the morning and then starts to trend. All right, so you have to decide and look at, and you have to go watch the markets. Either watch replays, watch it live for a while, do your homework, do your study, and figure out, one, define how much you're willing to risk on each trade. Is it $200 a trade? Is it $100 a trade? Is it $500 a trade? You have to decide. Then you have to see about the volatility and see if you can get enough entries that fit inside that criteria. Because it's great to say I'm only going to risk $100. But if the stops would be too tight that they would get taken out in less than one candle, that the average to range is greater than your stop is, you're going to get stopped out every time. You're going to lose money. You have to be balancing between a reasonable amount that you are willing to take and what the markets are doling out. All right, in chart settings, try to keep your charts as clean as possible. And you go, wait a minute, Steve, you got all kinds of stuff on your charts. I guess I do, but I looked through a lot of them. And when I first started, I started with a very, very clean chart, and I started adding things to it. And then I got to the point where I then took stuff off of it. But number one, you have to choose what time frame. And I'm using this generic. There are 3 time frames. It can either be time-based, like a 1, 3, 5, or 15-minute chart. I would strongly suggest you probably don't try to trade on a 15-minute chart. You may want to look at it to help you determine where the trend is, but don't trade on it. Trade-based, tick numbers. What tick numbers would you use? Is it 233? Is it 333? Is it 377? Is it 512? Is it 1848? I don't know. A lot of it could depend upon the instrument, the amount of volatility. What works today may not work tomorrow. It may not work next week or next month because the market changes. Price-based, range or Renko. Basically now it's each one of those candles is defined by a specific change in price. Mine primarily are 4, 6, and 8 Renko bars. So it's 4 changes in price, up or down 4 ticks, 6 ticks, 8 ticks, or 10. And I'll go over those when we get out to the individual charts. Minimize the number of indicators you got out there. I have a trading buddy of mine in Canada who trades stocks. And his charts are like copulating worms. They are all spaghetti and all over one another. And I keep asking him, what are all these on there for? And he has 3 or 4 momentum indicators, all of the same time frame, basically. I said, why don't you just choose one? All this is going to do is confuse you, and it does. Okay, so whatever it is, make sure that they add value to your trading. Make sure that how many and which ones you use are their personal choice, but make sure there's no duplicates. Like I'm talking about, if you have 4 different ones that are talking about momentum. I do have 2 indicators other than the moving averages, but 2 down below in their own pane that are momentum indicators. But they basically look at different time frames. One is a fast and one is a slow momentum. All right, my chart settings. I use wrinkle bars. I actually use uni-wrinkle bars, which means that it has a wick. A Renko would not have a wick, but that's not telling you what price really did. I use them in 2 moving averages, the 9 volume weighted moving average and a 20 simple moving average. And those are used primarily to help me judge the trend. I'll use an R squeeze, and there is a you'll see on some of my charts there's a proprietary indicator that unless you have the NetPicks Counterpunch Trader, you won't have an opportunity to get that unless you're using NinjaTrader 7. The R squeeze here is basically a Bollinger Band squeeze, and it helps identify when you're getting compression. And it's really a momentum judge. And I put down swing levels and trader pivots. Not necessarily because I use trader pivots, but I want to be aware that other people may be using trader pivots, and we might get reactions around those areas. My contention is trader pivots are kind of like moving averages, like the 50 moving average or the 200 period moving average. They'll act as support or resistance temporarily, but the markets are going to go where the markets want to go. The markets will go sometimes through them like knife through butter, but lots of times, like over in this chart, let's draw this up. See how we got around this level? It bounced a couple of times, once higher than the other, but ultimately it went through it. It basically had enough strength and enough energy to eat up all those buyers that were down below. All right, high probability patterns, and this is the key. Define high probability. I don't have a quantifiable number. It's just I want to have ones that are better than 50-50. Because really all I really have to do, if I set stops and manage them correctly, I only have to be right about 50% of the time and go make money. I want to make the market prove that it wants to go in your direction. Basically earn my money. Favorite patterns. They're the same as stock trading patterns. J-hook or zigzag. Pop out of the box. Above or below consolidation and a continuation move. So there's basically 3 different types of moves and a bullish and a bearish. So there's about 6. That's all. All of them have basically the same concept of you first get a breakout or a breakdown. It will usually be retested unless the market's extremely strong or extremely weak. Then they just blast right through them. And you go, well, you have to either judge it and get on board with it, or you're saying that, you know what, I'll just catch it on the flip side. So you enter in the second move to avoid the pullback, if that's what your game plan is. I'll play both of them. Sometimes I judge that the market is just going like a scalded dog, and I'm going to go with the flow. And I may have to take a little bit of heat with the pullback. All right, or bounce. And the targets are prior swing levels. Swing levels are key to me. That's why the 10 Unirenko is very important, because the 10 and the major trading is like an art. And when you get a lot of trading at a certain level, they could be swing levels set apart by maybe 15 or 20 minutes, and they're very close to one another. There's more support or resistance associated with those. Again, I talk about managing the risk, the key to success. All right, let's go into the patterns. Zigzag. Zigzag pattern is pretty simple. It goes up, it pulls back. It goes up, it pulls back. It goes up. Well, that isn't very hard, Steve. Well, yes, it isn't based on what I showed you here. However, if you got in a little bit late, maybe you went long this puppy right here as it broke above the highest swing level there, and then it pulls back against you, you're probably puckering up a little bit right here on the pullback. How do you know it's going to stop there? You don't. What you need to do is watch for reaction at support and resistance levels. I would almost guarantee you that over here to the left, somewhere, there was probably some sort of swing level to some degree to the left. I can't see it right here, and sometimes you can't go back far enough. You know, if it doesn't show up on a 15-minute chart, is it still valid? Yes. How far do I have to go back to look for it? Normally, I don't. All right, but that's usually when you go back and do the research after the fact and go, well, why did this wobble here so many times? There was probably a set of major resistance at that level. Was that 74.82 or 92? Yeah, 74.92 a couple of times. Wait for a break or a retracement. On this one, retrace back. And then go long where? Go long above. You could go long above where this one is. Where's your stop? Down at the swing here. Or an aggressive trader could go long before you get to the breakout, anticipating that it is going to get to follow through, and your stop's at the same place. So would you want to enter here and take the opportunity that you're going to be wrong more? Wait for here, and then you've got a wider risk. Pick your poison. That's really what you have to do. A lot of it really depends is how far those candles are apart, how much you're. Now the inverted of it, the bearish side. The bearish zigzag is down, bounce, down. Well, where does it bounce at? Most of the time, it will bounce at a resistance level, or in this case, it broke through that swing level, and where did it retrace to? Ha ha ha! It retraced right back to the old support, becomes resistance, is now resistance, and then it went down. Now you have confidence that this right here is above that line is a good stop. And where's your target? It's somewhere down here where the next swing level is. The other way to do it, if you can't figure it out, measured move. How far? How many points or ticks was this? This move down here will probably be about the same most of the time. Why? Because traders use it. It's one of those Fibonacci things where if enough people use it, it's a self-fulfilling prophecy. And look what happened here when we bounced. And then we did a little bit of a zigzag lower. Now, here's where I've got to look at what's going on with the momentum down here. Is the momentum coming from the positive side going down to the negative side? How far is it? I have to judge over here, and that's an art to try to judge that. How far have we come down in the day? You can't expect the market to continue falling forever. At some point, it will stop. You have to decide where you think enough is enough. Pop out of the box, or Poot B. Well, you have some sort of trading range. You'd like to see ones that are a little tighter than this, but in fact, an awful lot of them are really this sloppy, not that well defined. I could go over here And I could just say, well, Steve, isn't this one right here a pop out of the box? Oh, kinda, yeah. Is this a drop out of the box? Yeah, it probably is. Is this a pop out of the box right here? Well, I guess so. You have to define what it is. It has to be, to me, a significant amount of time. It has to be consolidation where, and again, I'm sorry I can't put numbers on it, but you get a number of zigzags, maybe 3 or 4, where you can't go higher than a certain level, you can't go lower than a certain level, you can't go lower. Hey, one thing I'm noticing here, we've got a higher low every time here. Do you think we might be getting a change of character here? Uh-huh. It can't go lower. What's happening down here? Ooh, our momentum indicator, the R squeeze, is coming up. Hey, maybe somewhere over here we should think about a long. It's an art. You got to try to put it all together. And you got to do it in real time. Bullish continuation. Price really pauses usually at a prior resistance level or a prior swing level. Some sort of resistance level. And it's usually only between a 3 or 4 candle pattern. Normally at the levels that I'm using on a 1014, it's 3. I guess if you were using a 610, there might be 4 or 5 sometimes. But then that becomes more of a little mini consolidation pattern. And all this really is a very small consolidation. But it shows up a lot. It jumps out at me, the three candle pattern. It will usually continue higher because it goes in the direction that it entered the box. It enters the box there, goes sideways, and exits the box to the upside. And I say usually, not always. Okay. I'd say operative word is usually consider. It all depends on momentum. The momentum here, well, you're not at 0. There's the R squeeze. That's not at 0. No, but is it low enough based on history? Yeah. What's your overall feel for the market? Wait a minute, is that technical? I don't know. Probably not. But it's got to be there. And you've got to have confidence in your own judgment. And you're going to be right all the time? No. All right. This could be an excellent area to enter and go long. Well, what if you don't have your net picks? The net picks went long down here. Where it was over here. Where's your cross? I mean, we're below. You don't need that. You break out of here. You put your stop 2 to 3 ticks below the low here, or use your volatility stop. Roll your own. I say, do I really want to do I need to let it go all the way back here to the volatility stop for me to know that I'm wrong? On a closing basis. On a closing basis, if it closes more than 2 to 3 ticks below that candle, that pattern, I'm wrong. Does that mean I can't get a momentary? Let's do this. Let's draw a box. And let's draw a wick. Got to get a wick like that, followed by color green. Maybe that. Now, should I stop myself out here? If you can help it, you should make these close to make it. But I contend that these already take into account the extra volatility. It's called a volatility stop, and you play around with the numbers that give you enough room but not too much room. You'll have to play with those parameters that fits your style. If it gets down here, I'm out because I have no idea it's going to stop. Now, yesterday, I got stopped out for a $170 loss. It turned out to be something like a $300 winner. It ticked me off, but I entered the trade. I did that correctly. What I didn't do right is I didn't re-enter when it gave another buy signal right after it. Too busy licking my wounds. All right, the target's the next swing level, somewhere up here, which is why I try to mark up swing levels in that little light blue line every day on the 15-minute chart. Bearish continuation, just everything on the flip side. If it enters going down and you get into this continuation and the momentum indicators in this case are really excellent, you're probably going lower. You're probably going a lot lower. However, how much lower are you going to go? Is it going to react to this primary pivot? Probably. Is it only going to be temporary? Probably. But how much heat are you going to have to take through that? You'll have to decide whether you can stand getting down here and the next candle does this. Remember, your stop is up here. You want to know whether you have to decide whether you think it's going to stop here, go sideways here, or bounce. And if you can take that heat. With that kind of setup, I probably would go ahead and take it. Primarily because of the momentums. Now, the only one that's a little bit different is that this squeeze indicator is at 11. Well, it's 11 now. It's probably 10 over here. It's still a little to the high side, based for that day. All right, I like this little cartoon. We're talking about the tulips. What could go wrong in Bitcoin? Ha ha ha. If you fail to plan, you're planning to fail, according to Benjamin Franklin. Now, these are just some of the trading rules, but the ones that keep me alive and keep me trading and keep me from blowing out an account. I quit trading, the power of quitting, when I meet or exceed my daily goal. Some people will argue with me and say, if you're on a roll, keep going. Well, that sounds like the people at the casino, and the casino loves you there because the longer you stay at the table, the more chances they have of getting their money back. If you exceed the daily loss limit, the max limit, whatever that is, if you lose 3 trades in a row, it's obvious that if you lose that many, a certain number of trades in a row, 3, 4, 5, whatever your number is, you're not in sync with the markets. Stop doing it before you throw more and more money away. Walk away. Thank God there's always another trade, and there'll be one tomorrow. Those following these rules will allow you to maximize your gains and minimize your losses, and to keep you in the game. If you have no money, you're out of the game. Let's go over some chart examples real quick. All right. I traded a single contract. Entry on the break above. Now, the net picks counterpunch trader did show an entry down here with a stop way down here. I entered on the break above the level just after it, so I'm not going to get their full extensions, but I'm also not going to have to pay the full price because since it's already gone up, I can use a tighter stop. About 20 ticks here. The momentum oscillators were pointing up. Whoops. Let's get this one. They're pointing up. And I exited at target 2 because target 2 on one contract is my rule that I try to do. If I do 2 contracts, I'll exit 1 at target 1, target 1 and 1 at target 3. Well, wait a minute. I got out of target 2. Target 3 was hit here even if I trailed it. My goodness, it went up another 40 ticks beyond that. 40 beyond where I exited. Well, you can tell when you look at this, you're going to see that little wick down below meant that it got up to this level and pulled back. At one point, this was a red candle. It ended up going higher. The rule of thumb is that if I'm in one contract, I exited target 2. Because if I don't do that, the vast majority of the time with one contract, I don't know that I can control it because there's a lot of difference between these two right here. Between target 1 and target 2 could be 10 or 15 ticks. Over time, that's serious money that you're giving back. That's why you need to be able to trade 2 contracts if you possibly can. Okay. All right, let's go here. All right. Here we are, one contract again. Entered on the bounce. Because it penetrated, it bounced right back to where? My goodness, it bounced right back up to the prior support level that got busted. Now it's resistance. And once it came back through there, kaboom, short. We're at R1 here. I mean, you would short above R1? Uh-huh. Guess what we did here? These 2 candles right here, or 3, they have wicks above. It was going down and bouncing and bouncing. That was a little unnerving. I was getting to positive numbers, and it would right here. Once I got a positive number, it went back. Went positive number and went up, and then it bounced up. Each one of those I'm giving ticks back. Try to look at the big picture. Put in your targets and let them run, and move your stop down accordingly. Where did the stops move from and to? My stop started right here, just on the other side of the pattern. This is a continuation pattern, right? Along with a zigzag, but it's a tiny zigzag. And you keep lowering the stops down as the volatility stop goes there. Then you need to make a judgment call. I got pretty lucky on this one because there was a resistance, a swing level over here to the left that was around 220 here, 220 right about this line. And I set my target a little bit before that so I make sure I get hit. And I'm watching it. And each one of these wicks above, those 3, 4 candles, it's going against me a little bit. It's zigzagging within that candle. So it's not perfect. It looks so easy after the trade is over, after the candles form. But during the middle of this, it's doing a lot of step down. Zigzag, zigzag. Just do one of these things. Internal to that candle. Then the next candle. And the next candle. And it's not all that clean. Now, what would have happened if I had just done the stop? Which would have been better? Well, stop out was right here. I did better than the stop out, which is good. Could I have done the stop out? There are times when I look at it and I pick out my targets based upon swing levels, and it goes right through them. There are many more times, though, that it doesn't. So I've decided that I'm going to take my money, I'm going to take my half out of the middle. I'm going to be satisfied with that. And if I don't get the runner, so be it. Now, the idea behind having 2 contracts or multiples of 2 or multiples of 3 would be that you can let the last contract run its course so that you can be in the trade when you get this 40, 50, 60, 70 tick runner. That's the theory. You have to decide how much you're willing to give back, because a lot of those are many more times that it's actually going to bounce against you than it's you're actually going to extend. All right. There's a zigzag down. You can also make a case that there's a little bit of a consolidation going on right there, but it's really kind of ragged. But you can see there's a move down, move back up to a little bit above, a penetration below the swing level, a penetration above and forming a new level. So up in here is going to be the stop as we go busting through. Well, luckily, this one also had a counterpunch trader signal. And down here below, momentum was passing from positive to negative, and the R squeeze was already in the negative, but it was going lower. How much lower? Notice how the R squeeze bottoms out right at the time that we hit the absolute bottom, right above support 1. Notice how the momentum oscillator is late in coming, because it's not looking at this time frame, it's looking at a 5-time aggregation above this. So instead of being 4 ticks, it'll be 20 ticks. And so therefore these candles will be larger, but they take longer to form. All right. 16 tick stop. Follow along. Cover at 1682, which is right here around target 3. It went all the way down to just above S1. Lots of times they do that. It went down and retested it. This is where the pros, they will look and they'll see this is close to a double bottom. And the fact that the R squeeze, if they're looking at anything like that, is getting stronger, they'll go ahead and go long. Most of the time when they see a potential bottom, double bottom, they'll buy here very quickly with the stop right below it. So they have a very, very tight stop. Do they get stopped out a lot? Yes. Do they worry about it? No. Because lots of times they get the reversal and it zigzags higher. All right. How to enter on the swing level and consolidation. If we can look over here, I'm going to pick out the consolidation as being basically right here. This was an excursion. I'm going to ignore that little excursion below. Yeah, well, it did trade down there, Steve, didn't it? Yes. Okay. So maybe you could just cut off this part too. And the consolidation was just over here. Once it broke above that, you have to look and see what do you like. The R squeeze, again, which is the lower time frame, the faster reactor. It's easier to say lower time frame. And then the momentum indicator. Here I got up to target 3. It was 22 ticks from the original. Sorry, it was probably somewhere around 32 or so ticks. What happens usually when it gets up around 30 to 35 ticks is you'll get some sort of reaction here where it says it pauses. There is a continuation candle. Why did you go long above that? You go down here, the momentum oscillator is getting really overbought, and our squeeze is not anywhere near zero anymore. You have to decide, am I going to get that continuation move again? It turned out that you did get it, but it had to go through a huge consolidation right there. I don't know whether, again, this is oil. I'm not sure whether there was a swing level or a resistance off to the left or not. I'm almost positive there was. One thing it is, I can see it right now, it's right at the whole number. Whole numbers act, and half numbers act as very big support and resistance, especially in oil. Okay. Overnight trade. Well, wait a minute. You never mentioned anything about overnight trading. No, I haven't. Not to now. There are advantages. You could use the same concepts, the time frames for trading overnight. On Sunday, watch the open at 6 p.m. Eastern. Okay, watch when Asia opens somewhere between 8:30 or, oops, not that, 8:30 or 9:30. All right. Somewhere around there is when you're going to get a reaction. Watch what happens tonight when Asia opens around 8:30 to 9. We could get another deep reaction based upon our sell-off. So that might be a good time to try to trade one contract maybe. Now, this one was trading the Dow. If you want to trade the NASDAQ, you want to trade the Russell, you want to trade the ES. ES probably has a lot more contracts. And one thing that doesn't happen at night, or one thing that does happen is you get a wider spread. It's not one tick, it's 2, maybe 3 ticks sometimes. So your spread is a little wider. Dow is not as actively traded. NASDAQ is okay on the trading, but you're going to have slippage. But you can apply the same principles that you do during the daytime. Right. Momentum oscillators, same patterns. There's a continuation pattern. And where did it occur? Right at a prior swing. Why didn't I go that short there? I don't know. Was I waiting for net picks to tell me? Maybe. All right. Decent trade. One contract. Overnight trade long. Net picks. But hey, do I need net picks to tell me this? No. It's break above prior swing levels. And where is the squeeze? Momentum? Down and oversold, coming towards the zero line. And it did do a bit of a wobble right there at that level. And then followed up a little bit, followed by another wobble, and ultimately moved higher. The one thing that happens overnight, they don't all go in a straight line. Down goes more in a straight line than up. Up is, you take the stairs up, you take the elevator down. You take the stairs going up, you take the elevator down. La da 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 da. Sorry. All right. Overnight trade. Break out of a consolidation. I can see it right here, guys. See all this consolidation there? Kaboom! Breakout, breakout, breakout. And then what it did, you got another consolidation. Want to go long now? No. Look down here. The momentums are not near the zero any longer. It's not the same entry. as if we'd have gotten one down here. If we'd have gotten a consolidation down over here, that would be beautiful, but we didn't. Okay. All right. Why should you be interested? This is as of today, live. All right. Small account, doesn't take a lot of money, minimal risk, 150 to 300 to trade. Predominantly try to trade only in the mornings, except when the FOMC or other special events occur in the afternoon. Right now, 88% of our money, a little over a quarter. One can do well if you manage your risk. And we do have losses and drawdowns. Right now, this month is down cumulative 285. We still have the rest of this week, 2 more days, and we have the entire next week to pull ourselves up by the bootstraps and become positive. I have every bit of confidence we're going to do that. So we've had losing weeks. We have yet to have a losing month. Is it going to come? Maybe. But overall, it will go up and down. Cumulative for the month. Cumulative overall, the monthly totals. So actually these are labeled wrong. This is cumulative P&L, and then the left one's monthly. Okay? All right. Let's look here. All right. Kickoff special. First 35, I think Rick told me we have about 11 more slots available at this price. And if you're interested, please sign up. I know you know where to go, but I'll put it anyway. And any questions? We're open for any question whatsoever. If I don't know an answer, I'll make one up. No, we'll get you an answer one way or the other. I see Simon is typing and Alan's typing. Can I explain my targets, please? Okay. Maybe it might be better if I went to a live chart. Okay, this morning, if this one came up with a CPT, that's Counterpunch Trader, nominated along right about there, which is a little bit before the swing level. We went long on the breakout. Where would the targets be? Well, the targets are going to be the swing levels. And I'm going to take this off now and go, whoops. These numbers, these levels were identified pre-market, where S1 would be a target, and these other levels were defined by, let's see here, I'll show you right here, was by the bodies of the candles, and then the bodies of the candles, and I tried to line them up before the market opened. I was saying that a break above that level would then probably take us to the next level, and if you break that level, you go up to the next level. So, if I am going long 2 contracts, which I did, my first target is target 1, but I'm expecting it to go up to this level and do something. And what did it do? It did a wobble. it did a pullback and then a move up. I fully expected that move. So it made it easier for me to ride through the pullback. Because in fact, instead of doing what I just did, let me show you what it did. It closed this candle right here and went all the way down to there, and on that candle, at the time that happened, it looked like that. It looked like a red candle. I knew that I had to give it all the way down to here for the stop. It's above where I had a free trade, and I already had 15 or so ticks off into my pocket. So it gave me the liberty, because I had 2 contracts to ride through that one and to go up. Now, Counterpunch Trader nominated a second target and a third target. And they're basically about 75% of your risk, about 1.25 times your risk, and at about 2 to 2.5 times your risk. That's roughly what they are calculated. They calculate it a little bit differently than that, but it's basically what I use. Oh, sorry. Come here. Oh, let me do it this way. I will use a stop at 20 ticks down, and I will use my targets. Target 1 will be 15. Target 3, which is really my target 2, I'm looking for 35. I'm looking for a big run. So I'll have 20 tick stop and a possible 50 tick run up. That's kind of what I'm looking for. Now, is my stop really 20 ticks? It may sometimes be 25. If it is sometimes 30. But if it gets over 30, I need to reevaluate the entry. Now, the entry here, I think we actually got in on the break above. Where was the stop? Stop, by the time we got in up here, it already moved to there. So it's not way down here at the swing level, at the prior pivot. It's right underneath the last candle. All right, so you want to know what the targets are? I put in advanced trade management inside NinjaTrader. And when I enter with 2 contracts, it already knows that my first one that I want to look at, and I'm going to go ahead and I'm going to show you. You can't see it, so I'm going to copy it. Okay. Let's see. Gotta get over here, and this is my all right. I'm going to bring that open. Slide it over. Come on. All right. So what you're seeing here is this is my trade entry. It's called Chart Trader. And I can trade directly on the chart, but it takes this advanced trade management strategy and says, I want to have a quantity of 2 against this account. I want a stop of 20. I want my first target to be 50, and I want the second one to be 35. And that's what it starts out when it enters me. Then I adjust it based upon what I'm seeing on the chart. But this is a pretty good starting point. Pretty good starting point. Potentially this number for the stop might want to be a little bit wider based on the volatility we've had lately. So Simon, did that answer your question there, sir? You have to adjust them based upon your swing levels. Now let me say that I use swing levels as my targets. So my first target is going to be somewhere over here in the middle here. Alan, are you typing for a question, I hope? And my ultimate target would be up here to the highs. It got up towards S1 and it pulled back. The market just got so weak that the NASDAQ could not power itself against the rising market. Alan, the vast majority of them are available either directly as that I've got them or as a close approximation. Now, it all depends. I've collected these from various and sundry places. Some are paid for. Some are not paid for. They're free. Some are more expensive than others. There's a very... let's see which ones. You can put the moving averages in. And I don't know of any program that doesn't do a volume weighted moving average or simple moving average. Let's start there. I do know that their TradeStation does not have Unirenko directly in it. Third party stuff, you can buy it. I go, well, this is crazy. Now, the Unirenko I got from where? Let me go here and find out. You can't see what I'm looking at, unfortunately, but I think it's I'm looking. Sorry. No, it's not in there. As a matter of fact, though, lizard indicators. Nope. 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 I'm trying to remember where I got the... Yeah, Unirenko, not just a regular Renko. Now, which do you have a trading platform that you're using, Alan? Thinkorswim. Well, they have an approximation of it. Now, you have heard my deal about Thinkorswim, that it's about twice the cost. You're giving the markets a head start, which they don't already need. Here's how the Renko charts are done. Let's take this up here. That's where I got it. It's freely available for NinjaTrader. Now, let's go back here. I'd open it up, because I'd open up an account with them. You could go a lot worse. I could basically give you and help you configure your system, and that's another thing I'm going to do for everybody. Everybody who signs up here, I will sign up to spend at least an hour with everybody, talking about their setups, making it suggestions on what you might want to do differently, or how to set it up. Whether it's, I have Thinkorswim, I have NinjaTrader, I have TradeStation. I will help you set up for those. The one I have the least amount of experience with is TradeStation. So I will warn you of that. Let's try that for Stink or Swim. Now I think they call it I think they call them range bars. I'd have to look over on my. I do have some Thinkorswim setups. So, Alan, if you Ninja is really easy. I mean, I can send you over. I've already shared my setups with a number of other people, and okay. Well, anyway, I've already shared my setups with everybody. The only thing that you would not get, because that's proprietary and they've locked the system down, is the Counterpunch Trader. Now, it has what they call their exhaustion dots. Let me change my color back to green. I hate to do it red. Theirs are these big green dots or big red dots. Those are their exhaustion dots when you go up, or exhaustion dots that can't go any lower. They're basically swing levels +2. So if you look here, you could have the blue one straight out of the box in NinjaTrader swing. You could have, I can get you the one that color codes the difference between here, because I have that code wherever I got it from. I don't remember. I'll be happy to share that one with you. It'll also change the color when you go from a down to an up to green, down red, up to green. That's on the 20 period to 20 SMA. I will not be able to share with you this momentum oscillator. But if you're in the room, you're going to be able to look at my screen and see where the momentum oscillators are. But you can get the R squeeze. They gave away a free copy of this momentum oscillator in NinjaTrader 7, but not for NinjaTrader 8. And there are a number of features in NinjaTrader 8 that I'm trying to convince people like Chris, like Crispy Critter. I'm asking him, Chris, you really need to come over to NinjaTrader 8. There's a lot of features. There's only one feature in NinjaTrader 7 that I would have liked to have kept that they couldn't. And as a one-button change, they had to make a choice. Then you won't get the dots, so the stop dots won't be there. But I have the chandelier average to range volatility stop. I can get you similar to one in Thinkorswim, or I can give you this one in NinjaTrader and help you set that up. I don't think there's much of anything else. The targets, I'm really not using their targets as much as I am my own. The only thing that's doing for me, it's giving me more confidence that the target that I'm choosing is verified by the system as well. But target 1 was right there. This morning I think I moved it down a little bit because I wanted to make sure I got filled. And I think, did we take target 2? I think I took target 2 instead of target 3. It went all the way up to target 3. Maybe I took 3. I don't even remember. I think I probably took 2 because I only got $235. And that would have been, oh yeah, I didn't take 3. Wait a minute, that wasn't the right place. Let's take it all the way back to the beginning where I really was. Up here, there was their target. Their targets 1 and 3. 36, I probably took 20, 15, right? Then I took 56, minus 20, 36. Yeah, I took it off right there because there was a swing level. Okay, sure enough. Any other questions out there? If you don't have any questions now, or you decide that you've got questions later, please go ahead and ask me, either in the room. I would, if you're in the room, I'd like for you to post it to everybody. Just if you can, unless it's something really personal. I'm going to give you my Gmail account number, address. TopGunFutures@gmail.com, and then on the subject line, would you just put down something like futures configuration or something that kind of makes sense, that'll stand out so I know it's not junk, or Top Gun Futures room, then I can sort on them. I get a few hundred emails a day, so I'll do my best. If I don't respond to you in say 24 hours, I haven't seen it. All right. I want to thank everybody for being here this afternoon. And for those who are listening using Memorex, you missed a good session this afternoon. All right. And hope you enjoy the video. You guys take care.